for the very few. I wonder how it is in South Africa. Do you have the same issues that you're finding in Kenya? Very few people can afford to own, to have houses.
I must tell you that after the financial crisis that we saw back in 2008 and 2009, the banks have taken a bit of a back step with regard to offering 100% mortgages. So we are seeing an increase in affordable housing projects coming through the pipeline, being taken up very well by South Africans, I must add. So hopefully we'll see the same thing coming to a country like Kenya.
Hopefully, although at the moment we're still that, the cost of housing is still very high, and we'll be discussing that shortly. Now, looking at the Kenya mortgage finance, there is a number here that they're quoting, which is 200,000 mortgages in the Kenyan market, which is up against a population of 40 million. And it's a pointer that most Kenyans cannot afford houses. It's beyond the reach of many. And now joining me in studio, we have Faharana Hassani. She's a property index, she's a property development manager at Haas Consult. Many thanks for joining us. Now let's start with that very grim statistic that only 200,000 mortgage market in Kenya, up against a population of 40 million Kenyans. Why are we seeing this very big disparity?
Actually, the figure is even more bleak. The actual figure is 20,000 on the ground. And if you look at the Kenyan population, we have about 40 million as our full population. Of this, about 3.94 million is middle income. With only 20,000 mortgages, you have 0.5% is the mortgage penetration. And if I remember correctly, I think the figure in South Africa is more like 54%. There are two main things that have contributed to this. The first one is affordability of the mortgages in Kenya, and the second one is accessibility. So if you look at the case of affordability, the mortgage rates in Kenya have been historically very high. Currently, the rates are spreading from somewhere around 13% to 18%. So for anyone to afford a mortgage, they're paying way more than they would, for example, in rent.
And how many banks do we have on the lower end of 13? And how many do we have on the lower end of 18? The spread, the interest rate spread
is quite significant, and this is from a central bank rate of 9%. So you have a spread of between 4.5% to 9% as the interest rate spread, which is very, very high compared to most developed markets. So when you take that, it becomes very, very expensive for people to get into the mortgage market. The second problem in affordability is that there's a big requirement for down payments. So for anyone to even start buying a house, they must have at least sort of 20% before they can get into that market.
And is the 20% beyond the reach of most?
It is, because if you take a property being sort of 6, 7, 8 million shillings, 20% is 1.6 million, which people can't build up from their salaries. So you find that there's a demand for mortgages that are a little bit more user-friendly, so to speak. And I believe Housing Finance are coming up with a product where they are financing 105%, in fact. So that's certainly a good move towards making mortgages a little bit more affordable for the market. But the second problem we have in Kenya is accessibility to mortgages. Now, the mortgage market is very much tailored. You'll see on most mortgage requirements, the first thing is a payslip, which tells you you need to be in formal employment for you to be able to get a mortgage.
So that is actually cutting out the small and medium enterprises, people in the informal sector that don't have a payslip.
Very much so. And the interesting statistic that will be very interesting for you is in the last 10 years, those in formal employment have gone up from 1.6 million to 2.2, but those in SMEs have gone up from 800,000 to 12 million, which is a huge number. But these people don't have access to those mortgages because perhaps they don't have the monthly income to support that mortgage. And I think there's a big vacancy there for mortgage institutions to respond to that, and then doing that opens the market up to people in informal employment.
Mm-hmm. Now, in the third quarter index, it shows that the slowdown in the third quarter. In the report that you just released, the Haas Consult Index,
yes,
property market report. Now, it shows that the market in the third quarter slowed down. Why did we see the slowdown?
Well, in every year, this particular quarter is always very slow. It might be to do with school holidays, people travel, there's less investment happening at this time of the year. But I think in addition to that, there was this expectation that post-election things would sort of pick up a little bit more. Unfortunately, it hasn't. And I think the big thing...
Unfortunately, it hasn't.
Unfortunately, yes. The big thing with that has been really to do with public finance pressures. I think a tightened economy, the shilling has depreciated. So I think spending power has been cut down a little bit. And I think that's been the main cause. The interesting thing, though, is that in certain segments of the market, there's been a slight rise. For example, in the townhouse market, which is mostly to do with areas slightly outside of Nairobi. You know, perhaps a little bit more affordable than the others. That has picked up, but the rest of the segments have shown a slight fall.
And how are rents faring? They're saying how buying a house is still expensive, but how are the rents faring?
Well, you know, rents had gone up quite a lot in the last year. So they're coming to a stage of price correction. They have dropped slightly, but that's in the detached housing and in the apartment market. In the townhouse market, surprisingly, gone up a little bit. But otherwise, I think they're beginning to stagnate a little.
Now, looking at Nairobi as a hub for the East African region, and of course in the recent past we've seen a lot of multinationals setting up in Kenya. We have the likes of General Electric, we have IBM, we have the likes of Visa.
Yes.
Now, looking at the fact that you're having a lot of foreign direct investments coming into the country, and of course housing will be a requirement, how is Nairobi faring if you compare it to other cities that are also attracting the same level of foreign direct investments?
Well, Nairobi has, in terms of the housing stock, has, you know, got very good housing stock, especially in the upper segments of the market. And you find that, you know, for example, the NGOs that are present, there's no shortage of housing for that. One constraint that may, you know, face these companies is the changes in regards to immigration laws, work permits, renewals not coming in as fast. So there may be that segment of the market might slow down because the take-up won't be as strong.
When would you expect an uptick?
I think that really in terms of the market picking up, I think it's going to be very strongly related now to the economy. And as the economy begins to pick up, I think real estate always goes with it.
And that would be interesting to watch, especially after we saw the World Bank and some of the other organizations cutting down the expectation of how Kenya is likely to perform this year from 5.6 to about 5% this year. So it will be interesting to see how that works. Many thanks for joining us. That was Farhana Hassan Ali. She's a product development manager at Has Console. We are now